it's good receiving your paycheck. However, it is important to understand that your salary will have deductions, which are mandatory payments taken out of your paycheck before you receive it. Paycheck stub has a lot of information. So what is USRN salary deductions that you should know and expect? Hello and welcome to this video on US salary deductions. If you're an employee here in the United States, you're probably familiar with the fact that a portion of your salary is deducted for various purposes. My name is Robie. I'm a Filipino registered nurse based here in New Jersey, and in today's video, we'll go over some of the most common salary deductions that you usually see on your paycheck and what they mean for your take-home pay. So this video is inspired by many of nurses asking, I thought I earning 6 figures, but it's not enough. And there's so many deductions. So I hope you like, comment, and subscribe because this is an educational video on where our money goes and what are the deductions that we need to know as we expect every pay period. Your paycheck shows gross pay. It is the total amount you earn before taxes. And net pay is the total amount you get after all withholdings. So, and most commonly, employees get paid bi-weekly, and from your pay stub, it will show the exact amount deducted for its pay period. So, what are the basic and required deductions to know? In addition to federal income taxes, there are other basic required deductions that you should be aware of as an employee. These deductions are typically mandatory and are taken out of your paycheck before you receive it. So some of the most common deductions include federal income taxes. You need to know why are these deductions taken out from our paycheck. So let's get to it. Let's talk about federal income taxes. This tax that is imposed on all taxable income earned by individuals in the United States. The amount of federal income tax you pay is based on your taxable income. The tax rates for federal income tax ranges from 10 to 37% depending on your income level. So later on, we're going to make an example of the salary, gross income salary you receive, and how much federal income tax will be deducted, state tax, Medicare tax, and Social Security tax. So stay with me so you will better really understand in an itemized deductions what are the percentage being taken out from your paycheck. In addition to federal income tax, there is also state income tax. Some states also impose a state income tax, and the amount of state income taxes you pay varies depending on the state you live in and your income level. So there are states like Florida, Nevada, South Dakota, Texas, Washington, and Wyoming that do not have state income taxes. In New Jersey, like where we live in, there is a state income tax. So depending on where you live and work, you may also have state and or local taxes deducted from your paycheck. These taxes are required by the government and fund various state and local programs and services such as education, transportation, and public safety. Next is Social Security tax. This is a tax deducted from your paycheck to fund the Social Security program, which provides retirement and disability benefits to eligible individuals. This tax is split between you and your employer, with its party contributing to 6.2% of your taxable income up to a certain limit. So the current Social Security tax rate is 6.2% for you as an employee, and your employer also pays 6.2% for a total of 12.4%. So in 2022 and 2023, this year, the maximum taxable earnings for Social Security is $147,000. So this means that even if you have multiple jobs and your gross earning income is $200,000, your taxable earning for Social Security is only $147,000. Another mandatory deduction is Medicare tax. So this is another tax that is deducted from your paycheck to fund the Medicare program, which provides healthcare benefits to eligible individuals. So like Social Security tax, this tax is also split between you as an employee and your employer, with its party contributing to 1.45% from you. So like Social Security tax, this tax is also split between you as an employee and your employer, with its party contributing to 1.45% of your taxable income. The current Medicare tax rate is 1.45% for employees and also 1.45% from your employers, for a total of 2.9%. Unlike Social Security tax, there is no limit on the amount of taxable earnings subject to Medicare tax. So those are the required mandatory salary deductions: federal income tax, state income tax depending on where you live in, Social Security tax, and Medicare taxes. So whether you are self-employed, you have to pay all of those mandatory required taxes. The are non-negotiable, and unlike health insurance, clothing, food, those are adjustable. So let's go to other salary deductions that are or not mandatory, because you may opt in only if you want to contribute. So number one is health insurance premiums. So let's talk about health insurance premiums. If your employer offers health insurance, you may be required to pay a portion of the premium. Your share of the premium is typically deducted from your paycheck before taxes are calculated, which is good, because it can also lower your federal income tax liability. This deduction helps cover the cost of your health insurance coverage. So depending on what health insurance choices your employer has, it will be dependent on your paycheck deduction. So aside from health insurance, there are also medical insurance coverage that you have to pay, and the basic ones are like dental and vision. Most often, larger institutions pay higher health insurance premium coverage for their employees compared to others. So for an estimate of 100K gross annual income and for a family of 3, the estimate health insurance premium that you have to pay is around $250 to $300. Pay deduction, also including the dental and vision. So that is only an estimate. Next deduction is retirement contributions. Many employers offer retirement plans such as 401k or 403b or other similar programs. These plans allow you to save for retirement on a tax-deferred basis, which means that you won't have to pay taxes on the money that you contribute until you withdraw it in your retirement age. Your contributions to a retirement plan are deducted from your taxable income, which can lower your federal income tax liability. And before we continue, let us know the difference between salary withholding and salary deductions. Salary withholding and deductions are two terms that are often used interchangeably, but they refer to different things. So salary withholding is the amount of money that is taken out of your paycheck by your employer and sent to the government on your behalf to cover your income taxes, like Social Security taxes and Medicare taxes. Your employer is required to withhold these taxes from your paycheck based on the information you provided on your W-4 form, which includes your filing status, if you are filing single or if you are filing married, and the number of allowances you claim, and any additional withholding amounts you specify on your W-4 form. While deductions, on the other hand, are amounts that are subtracted from your taxable income before your taxes are calculated. These deductions can reduce your tax liability by lowering your taxable income. And there are two types of deductions: standard deductions and fixed amount of deductions. But don't worry, this is another topic that we could talk about what to know about taxes. So stick with me, like, comment, and subscribe if you wanted to know more about money and finance tips. So let's go to the numbers. I have an example here so you can follow along how much are the deductions by numbers. I have an example of withholding gross salary of 100,000 per year. If you had watched my video last week, how much do nurses make in New Jersey, that's where I base the income annual salary of 100,000 per year. I will also link that video so you can watch after this. So let's assume that you earn a gross salary of 100,000 per year and you have filled out your W-4 form with your employer to withhold federal income tax. So with that gross salary of 100K, you are receiving 8,333 per month and 4,167 bi-weekly, because most of the nurses and employees here in United States are paid bi-weekly. So based on 2023 tax brackets and standard deductions, your federal income tax rate would be 22%, which means that your employer would withhold 435 from each of your bi-weekly paychecks to cover your federal income tax. So bi-weekly, your pay deduction is 435 and 870 per month for your federal income tax. So you follow me? Then let's calculate your Social Security tax rate from your gross pay of 100,000. So your tax rate is 6.2% of your gross pay up to the Social Security wage base, which is 147,000. But right now we're talking about your gross annual salary is 100,000. So your annual Social Security tax withholding would be 6.2% times your 100,000, which is 235 bi-weekly and 470 per month. So now let's go to your Medicare tax rate. So Medicare tax rate is 1.45% of your gross pay, and there is no wage-based limit. Therefore, your Medicare tax withholding would be 1.45% times your 100 salary, and it will be $56 bi-weekly or $112 per month. So this means that your total salary withholding for each bi-weekly paycheck would be 435 for your federal income tax, 235 for your Social Security, and $56 for your Medicare tax, which is about 726 bi-weekly or 1,452 monthly. So adding that with the health insurance and health and medical benefits would be 250 bi-weekly and $500 per month. So you have a total of 976 bi-weekly total deductions or 1,952 total deductions per month. For our example of $8,333 per month of your salary with the deductions of $1,952 per month, now you end up your take-home pay would be $6,381 per month. So don't get excited. We're going to talk about in our next video what are the total expenses, monthly expenses living in United States, so that we can follow along. Remember, I discussed from the other video how much do nurses make in New Jersey. Now we're discussing about required deductions and taxes, and next we're going to talk about our expenses, so you could all follow along and you have a general idea if nurses are indeed rich nurses or they mean registered nurses. Again, note that these numbers are just an example of your actual salary withholding, may vary based on your income, your tax bracket, and other factors. It's always a good idea to check your pay stubs regularly and you know exactly what are the deductions that are taken out of your paycheck to ensure that the correct amount of taxes is being withheld from your paychecks. So I do hope you got education from this. If you have questions regarding your paycheck, ask your human resources, or if you want some changes in your tax deductions from your paycheck, definitely mention this to your accountant or from your professional tax preparer so he could better assist you. Remember, it is very important to know where your money goes, what are the specific deductions that are taken out from your paycheck, because we need to know. And it's not embarrassing to ask. Go to your tax preparer. You've got this. And if you find this helpful, please like, comment, and subscribe, and share this to your friends. Thanks for watching, and I'll see you in the next video.